So I guess we survived. I know on Friday, after the Jackson Hole meeting, when the Fed was basically saying, hey, we're still as hawkish as it comes, and the market went down and down and down and down, and then it went a little sideways and then down and then down and then down. That prompted many of us to be sitting on the edge of our seats this weekend wondering what's going to happen. And then you probably got up this morning and saw the absolute bloodbath of a scenario, and you were probably thinking, oh shit. Well, the bell just went dingity ding ding ding. We survived Monday. It wasn't a good day. It wasn't a bad day. It was just kind of a whatever day, depending on what you were or weren't watching. Now, I'm not a financial advisor. I'm not clairvoyant. I can't tell the future, at least not as of now. So no one knows what the next one's going to be. No one knows what the next bar is going to be. Depending on whatever time frame you're on, it's a little bit of a guess. And that's not going to stop me from throwing my guess out there because, hey, 50% of the time we're right 100% of the time. In this video, I want to do a little bit of a breakdown of what went down on Friday, what people were saying over the weekend, what people were saying today, the major things to look forward to coming in this week, technical levels, but also important macroeconomic updates. Maybe most excitingly though, I want to get into an interview from CNBC. It happened early this morning where there was a city wealth manager and she happened to be talking about shorts covering, and then she was cut off very, very abruptly, and you're going to see the shock in her face. And it makes you kind of scratch your head and wonder, what the hell's going on? Well, it looks like Christmas came a little early, little red, little green, little bit in between, which it is way better than things look this morning. If you looked at the S&P 500 this morning, it was very wet. It was a brutal bloodbath. And of course it had to be because just yesterday, our boy Jimbo here, the inevitability of a huge second day decline, even after a horrendous first day, is a standard aspect of this market. Well, the market saw that and thought, cool, I'm going to be pretty weak and then just push for most of the day. Of course it has to, because whatever Kramer says, we know the opposite's going to happen. Now, this obviously a little tongue-in-cheek here. What he brought up, especially after such a pretty hardcore sell-off on Friday, we went down around 3.4%. And today, granted, yes, we were more red, but we weren't seeing this mega sell-off that he was referring to. Statistically, what he said does have a point, and it's more of the catalyst from what happened on the Friday meeting. Powell's message at Jackson Hole shows that the Fed won't pivot from its rate hike policy even if inflation continues to fall. So basically, we have a Fed that's either hawkish or dovish, which loosely translates to bearish or bullish. Now, all this is done to fight inflation because, yes, we're still at a 4-decade high. We need to take serious measures, and the side effects of these steps is it puts downward pressure on the economy because they're intentionally trying to lessen demand, but that's also how you battle inflation. Things have been going well recently. And that's why, if you check this out, let me switch this over to the daily chart here. You have a crazy push from mid-July all the way up until mid-August. And a lot of people were kind of under the assumption that this happened because they're like, wait, maybe the Fed won't be so hawkish. We finally got some numbers and then inflation's coming down. And then on Friday, we got the sobering reminder that they want to see a trend of downward numbers in terms of inflation, not just a singular print of a colder than expected inflation. But even with this happening on Friday, the reactions to it, I thought were pretty funny. The Fed is at risk of tightening policy too much, and it's not clear what inflation indicators Powell is watching. And then right away, Powell finally sent the right message at Jackson Hole about the central bank's commitment to fighting inflation. I love it. 50% of the time, you're right 100% of the time. If you say anything and everything, eventually you got to be right. You just go back in time and nitpick out the ones where you're like, oh no, I was totally right in this. So this all happened, and today it got even more funny. I was not thrilled to see the stock market rally following our most recent Federal Open Market Committee meeting. These FOMC meetings, that's where they actually do the interest rate hikes. Speaking of which, as of now, there's a 27.5% chance that it'll be 50 bips and a 72.5% chance that it'll be 75 bips. The larger the rate hike, the more hawkish our Fed is being, as in they're more aggressively fighting inflation, but that puts more downward pressure eventually on stocks. Heading into the Jackson Hole symposium, the odds of 50 bips were high. And then when he started talking and kept talking, It was dropping as 75 bips was going up and up and up. And then that eventually led to a pretty big sell-off on Friday. Anyway, coming back to this, which broke out today, this is ridiculous. A Fed member is actually saying, no, that was the wrong move, which is crazy. This is telling me that in the short term, at least, it's pretty dangerous to be a bull in terms of the overall market. Will there be certain commodities and equities and crypto that outperform in the short term right now? Of course. I'm talking about the overall market, basically the S&P 500. When you have a Fed member saying, I don't know how I feel about this rally, they're kind of telling you to like, whoa there, Tonto, we're about to smash it back into your face. I'm sure we're going to get more and more discussions like this throughout the week. Today, we did have the Fed vice chair speaking. Tomorrow, Barkin speaks. We also have Williams speaking on Wednesday, Mester, Bostic again on Thursday. And then Friday, we actually have the unemployment rate because it's the first Friday of the month, which that's how you always get the unemployment rate. It's the first Friday of every single month where we get those numbers finally coming in. So the Fed, I'm sure they're going to be doing the classic Fed speeches this week where they're kind of agreeing with them, but maybe if things get too aggressively bad in the market, they'll try to calm things down because if you were paying attention on Friday, it was kind of crazy. In my personal opinion, it's all going to come down to not really predictive of like, oh, wait, are we going to get higher lows? Are we going to bounce from here? Or like, what's going on? I get that question a lot. I think it's as simple as literally listening to the Fed. Their goal is clearly the trend in inflation. If the numbers, the CPI numbers, the PCE numbers, if they keep coming in cooler than expected, I think we're good to go. And I think that June low right here will be the low of the year. That's awesome. But all of a sudden, when we get the August numbers in September, when we get the September numbers in October, if they're not good, if inflation keeps going up, there's a chance that the June low is not the low of the year. I wish I could tell you where this is going, but we're in an environment where you have to be a little bit more reactive rather than predictive, at least in my own humble opinion. Overall, we saw a strange dip into the end of the day and also in the options market. There were millions and millions of dollars being loaded up anywhere from 30 to 80 days out. You know, just because they're playing with big money doesn't mean that they're necessarily right. The dollar had a oddly weak day, but overall the trend in the dollar is still uppity. This is going to have an inverse relationship with the overall market. But then for those of you just very quickly who are excited about the meme saga, AMC and Ape had a pretty decent day. AMC was up 3.3%. Unfortunately, Ape was down 6.7%, but the AMC pop was enough to kind of make it green, the combination of the two green on the day. Now, what I thought was maybe the most interesting, the most exciting part of the day is an interview that happened before the market opened. Now, I tried very hard to track down who originally posted. I ended up finding Rockstar_Stocks, who then properly gave credit to the user on Reddit, Express Newspaper 806. I saw a lot of people kind of taking this and not giving credit, so I very much want to give it credit where credit is due on these two. Interesting conversation. Let me make this bigger, and then let's play it.
Chris and you, I think, are in the camp that you weren't fooled by that summer rally in terms of a new bull. Do you think it's a rally within a bear market?
We thought it was a bear market rally. You look at what really was driving that rally. There were a couple of different things, right? So the first was a lot of short covering. And when you look, there was that concept of, did we actually,
I'm sorry, but I've been told we got to go immediately. We've got some issues. Thank you. Squawk on the Street's going to begin.
So she's talking about shorts covering that recent push from mid-July to mid-August, and then right away, we got to cut urgently. Even the look on her face, absolutely shocked, and let's be honest, a little bit disrespectful. You're speaking with someone trying to get their ideas, opinions, maybe even their expert insights, and then all of a sudden you're like, no, we got to go. Like she was in the middle of it, cut her off, and granted, I get it, sometimes in national live TV, things happen and you have to cut. But it was just so strange, especially given what's going on right now, where there's such an emphasis of the retail community paying attention to what the shorts are or aren't doing. And then we get this type of thing. Now I get it. I'm fully there with you. This could very well be a tinfoil hat theory. For all I know, maybe they were excited about the Artemis launch this morning and maybe they had to cut to that. I don't know. I wasn't in the control room. Or are they attempting to do something a little bit more nefarious and stop people who have expertise sharing their thoughts on what's going on, especially as it relates to shorts. Now, obviously, this is a lot of conjecture. I just want to play it just because it was making its social media rounds. I wanted to give you my thoughts, but more importantly, I want to get your thoughts on this. Do you think this was just like kind of an unfortunate situation? Or do you think they legitimately did not want this city wealth manager talking about shorts covering? Please, please, please let me know your thoughts in a comment below. If you haven't already, and if you enjoy this type of content, want to help me out with the algorithm, don't forget to hit that like button. I'll catch you in the next video. Don't forget to subscribe. Have a beautiful day.